All right, so what I want us to do, and I don't know how far we actually going to get, but what I'd like us to do is to do activity 17 and 18. I think let's just start with 17, and then we'll see how it goes. Now, actually, let's just start with 18 actually. Because if I'm only going to see you today, and not see you until the 7th of May, then so where's 18? Here we go. Oh, cool. Right. So we went through the slides for learning unit 4. So now we can hop straight into the slides. Okay. Now, oh, and I'm operating through the workbook, the workpack. You guys have the workpack, right? You all have the workpack, huh? So you guys can use it by your cell phones as well. I'm telling you now, I'm going to give you guys an ice class. Come sit down. I'm giving you guys an ice class. That's going to be due for Friday. It's exercise 4.8 in your section. Exercise 4.8 in your section. I'll probably send that through before the end of the day. Okay. All right. So let's read the required there. Okay. We'll not do the work section. Are you on board? Okay. You have been said on one section before, right? Can somebody please say that on one section before that? Yeah, now? All right. That's really good. Maybe another time. You can go see. Cool. All right. So there, under required, it says use the relevant transactions from these given below to complete the necessary journal for the month of May 2016. Right? Tax payment or tax payment journal, remember that's the same thing. And then we have the pay tax journal, and we have the tax receipt journal. Right? Post to the ledger and declare the trial balance at the end of May 2016. Okay. So there they've given us the opening balances for those expensive accounts. So when you start to post to remember, this is for the end of May, and that's what we have here at the end of April. So those are the opening balances for the beginning of May. Okay? All right, here we go. Let's continue. All right. There we see source documents of DB traders for the month of May. Okay? Right. So we're going to get into those. That's pretty much your transaction. But before we get into those, let's see what we are saying up top there. Right? It says you are the bookkeeper of DB traders. The business is a registered VAT vendor and trades only with registered VAT vendors. The business charges, they say 14% VAT, but if there's any exercise that you bring out of this work tax, right, you must do it on 15%. Okay? So in your test and exam, it's going to be on 15%, or your assessment. All of it's going to be on. So I want you to practice on 15%. Okay? On all it says, all the amounts are inclusive of that unless that is not applicable. As a bookkeeper, you have been provided with only the source document for the month of May necessary for the preparation of the journal specified below. The books you use the business uses the perpetual inventory system and uses different markup for different products that they sell. All right. Then there is a BK, BCS, RT, CC, and PC are the source document codes for the bank statement. Duplicate cash slips. All right. So this is basically saying respectively. The bank statement is for BK. Duplicate cash slip is BCS. RT is receipt. All right. Duplicate receipt. And then check counterfoil is CC, right? And then petty cash voucher is CC, respectively, right? Assume all receipts are banked on the same day that they are received. That's cool. We will talk more about that when you need to bank anything. All right, so now we know what is required of us, all right? Now we can get into the transaction. Now, what I want you guys to do, whenever you approach questions with the journal, okay? After reading the required, after reading whatever additional information. When you go to each transaction, like you can see here, I want you to then label which journal is supposed to go with. So that's what we're going to do now. Okay, that's the next step that we're going to do. All right, so the first one there, it says, where you can see on the details and keepers, all right, source, document number there you can see 6566. Okay, and then it says delivery vehicle bought by the owner and keeper for the business. The purchase price of the delivery vehicle was inclusive of that. All right. All legislative requirements have been met for the full VAT amount to be claimed. Okay. Now, which journal should this go into? Should it go into the cash payments journal, the cash receipts journal, or the petty cash journal? Cash payments. Okay. Because here we are buying a vehicle. All right. So there's the 6 pieces there next to it. Then we go on to the next one, the B0. All right, it says sale of trading inventory. The markup on the trading inventory was 30% on cost price. So I told you guys, if you're not comfortable with your VAT calculation, your cost plus profit is equal to selling price calculation, here it's going to just, begin to get quite easy. Okay? So if you're not yet there, all right, or where you know you should be, please make sure you polish up in this week. Right? All right, so there, which journal should that go with? That was sales of inventory. The CRJ, so that's where we receive money, okay? So you put CRJ next to it, and look what I've also gone on to do next to it. I've built my model, cost plus profit is equal to selling price, and I've also then said 30% is obviously your profit, okay? We know that. And then they said on cost, so cost is then what? Is 100% because it said on cost. So cost is then 100%. Remember, whatever it's on becomes 100%. So the selling price is how much? 130. All right, excellent. All right, so let's go to the next transaction. So, sale of trading inventory. The markup on the trading inventory was 20% on cost. 20% on cost. All right, so let's go to the CRJ left, and then again you can go down all the way somewhere. And the profit is going to be 20%. It's on cost, so cost is going to be 90%. Selling price is going to be 130. Okay, we move on to the next one. Sale of trading inventory again. There's 14,250 less than 4% paid. Okay, the markup, the cost before the discount was 35%. Alright. So there again you can quickly just load our model. What is our model? Somebody tell me. They said 35% was the markup and it was on cost. So what is our model? What is our feature key to take SC going to look like? Yes, the profit is going to be 35. Cost is going to be 100, so it's on cost, yes. Exactly. Thank you very much. Then we go to the cost. And On the top, it says trading inventory purchase. All right, 57,228 less a 10% trade discount. Okay. DP okay. Then we go to the next one, P&P packaging. It says purchase packaging material and pay for it with 30%. This is when we entering that in. Yeah, the 30%. Then on the 17th, sale of trading inventory, the markup on this trading inventory was 30% on top. Okay. The VAT exclusive total on the invoice was 20,100. That exclusive amount. Okay. But this was a sale of trading inventory, so which journal should we go in? CIJ. Okay. Then we go to the 31st, salary paid to F Godwin, CPJ. Alright. Then the next one, drawings for personal use and super. Drawings for personal use. You know that M Super is the owner. So which journal should this go in? CPJ, 100%. Okay. They didn't tell us what we're going to go for trading inventory or what. No. They just said going to personal use and they give us a random amount. Then we know it should be going to cash. Alright, so that's going to affect it. That's the okay. Then the next one that we have here is purchase stationery. Okay. Purchase stationery. Now, do they say it's in the CPJ or in the petty cash or in the cash receipt? Do they say which one? They don't. So another tool would be to look at the source document. And so you see that you got PC. And remember in that when you're looking at what's it, DK, DCS and RP, and they have PC, you know that they said PC for petty cash voucher. Okay. So that is going to affect each one. Yes, the petty cash. Okay. If you have a question or a question like this, but they didn't give us the source document, you could then assume that it's a cash payment. Okay. Then it says inventory purchase. Okay, that is for the CPJ. You have to see there in the first column CP for check counted oil. Then we go to the next one. They say sale of trading inventory. The trading inventory was marked up by 30% on selling price. Therefore, the gross margin was 30%. Okay? So sale of trading inventory, this journal should be called CRJ. Okay? And then, what's our model going to look like? You know the markup is 30%. So what is our profit? Our profit is 30%. And then they tell us on selling price. So what else do we need? Selling price is 100%. Okay? So then what is our cost? 70%. Excellent stuff, right? Then we go to the next transaction. Also happened on the 27. Purchase new equipment for the business. Which journal? Second last one, receive interest from bank. CRJ. Since we are receiving, that means interest on our money. Okay? Then the last one, bank charges. CPJ, okay? CPJ. All right, now that we've done that, now the next question. We know that we need to do the cash receipt, we need to do the cash payments, and we need to do the petty cash. Those are the journals we need to do. So, which one do you want to start with? You just have to pick one, deal with that, and then move on to the next one, the next one. So which one do we want to start with? CRJ? Yeah, we can start with any. It's up to you guys. Okay, so let's start with the CRJ. Let's get cracking.
Okay, so literally now can you see how you made the job easier? Since we've listed all the transactions that need to go into the CRJ, literally we're just going to go in order of wherever we see CRJ. Okay, and after we record that, then we'll move on to the next one. All right. So the first transaction. So I've just put in the okay, you guys can see clearly. All right. Okay. I've just put in the doc number, the day, and the details because I want us to focus on the other key stuff. All right. So just to save us some time. Okay. So on the third day, it was a sale of trading inventory. Okay, and that was for 74,556. Remember what they said to us? We must assume all amounts are inclusive of that unless told otherwise. Okay, and they told us that every day that we receive cash, we can assume that it was also deposited in the bank. So analysis of receipts. Here I've just put analysis. Analysis of receipts is our till, our cash till. Okay, so if we have cash sales, the assumption is obviously that the money went into the till before we obviously took it to the bank, to FNB, bank, apps or whatever, to deposit the money. So here we write in that 74,556. Guys, at this point, in the journal, in fact, in anywhere, in any of our lectures, guys, at any point in time, if you have a question, feel free to ask. So chances are I just want to maybe finish off the point that I'm making, if I am making a point, but then I'll always then take your question. Right. So we've done that. Okay. Then, so that's the that inclusive amount that we put in analysis of receipt. In the bank, we also are going to deposit the VAT inclusive amount. So we punch in that 74,556. Then we know that this was cash sales. So this is obviously also going to affect the sales column. Okay. But remember what I told you guys. Sales is our income. So there we want to only include the money that's coming to us. We don't want to include the VAT portion. Remember, this is the VAT inclusive amount. So how do we get, what amount are we going to put into the sales column? If all we want is the amount that does not contain VAT, that is owed to us. Okay, so the amount there in the sales column needs to be the VAT exclusive amount. And how do we calculate that? If we know that the amount is 74,000 is the VAT inclusive, how do we calculate the VAT exclusive? Yes? Okay, so 15 over, well, that would be calculating the VAT amount on a VAT exclusive. Because remember, let's quickly do this here on the side. Remember we said VAT amount is 15, okay? VAT exclusive is 100, yes. And then the VAT inclusive is 115, okay? So what we want is this, the VAT exclusive, right? So we can put it into sales. What we have, however, is the inclusive. So what do we need to do? Get the exclusive, yes. How do we do it? Okay, so we say 74,000, 556, times, you said 100, divided by 115. Okay, right. So let's, you get this, 64,831. Okay, Then the next thing we need to do is to obviously then calculate the VAT. Okay? How do we do that? We say what we want is the VAT portion. Let me be consistent. 74,556. And then we say times what we want, which is VAT, 15%, divided by what we have, which is 115. Okay, and then you get that 9,000. That is obviously going to go into output VAT. That's how much you need to pay over to SARS as a result of this transaction. Okay, so rounded off to 2 decimals, this is going to be 7 cents. And this is going to be 30 cents. Okay. Now, remember on every sale, right, as long as we're in the perpetual inventory system, we also need to calculate cost of sale. So this doesn't end here. And this is where we now begin to use our model. And remember, our model, we said that the markup here for this specific transaction was 30%. So that's 30% on profit. And we said it was on cost, so cost is 100. And so our selling price was 130. Okay? So then, now, in order to calculate our cost, remember what we said? What we want, which is 100, our cost, divided by what we have. What we have is the selling price, okay, which is 130. Okay, then we say times the rand amount that we have. Okay, and here, what you want to do is you want to take the sales exclusive of that. Okay, because remember, our cost is, it has to be the amount exclusive of that, because whatever we incurred by way of input that when we bought these goods, remember we're going to claim that back, because input that is a current asset. So we don't include that in our cost. So we want to operate with that exclusive amount. So we take this 64, is it 64? Yes, 64,831.30, okay? And then we get the 49,000, okay? Let me just try and paste this. And then I plug that into cost of sales. All right, and done. We recorded the first transaction. Then we move on to the next CRJ transaction. Okay, and that happened on the 9th. Okay, and there they told us the amount is 45,600. So again, under analysis of receipts, 45,600. We deposited money same day. In some questions, you'll see in question 17, they tell you specifically, we deposited on the 11th and on the 26th. So you're only going to have amounts in the bank account, right, on the 11th or on the 26th, unless money was transferred directly to the bank, right? Right. So there we go. We've done that. Then again, this was cash sales, right, or sales of inventory. So again, we need to get that exclusive amount to put into the sales column. So again, we do the exact same thing. Oh, and again, by the way, we don't have to start with calculating the sales amount. We can start with actually calculating the VAT. So we could literally be here and say, okay, actually, let's get the output VAT that we owe to SARS. So that's 15 over 115, okay, times 45,600, okay, and that's going to give us this 5,947.83. Okay, now remember I told you guys I want to get you comfortable and used to the formula, using the formula. All right, in the interest of time, if it's faster for you, you can quickly just take that amount and subtract it from the 45,000, okay, to get the VAT exclusive amount. Okay, does that make sense? Okay, so what we have there that we should plug into sales? What amount? $152, okay, and 17 cents. Yes. Thank you very much, sir. And here, there the markup was 20% on cost. All right, so profit is going to be 20%. Okay, cost is going to be 100. So then selling price is going to be 120. Okay, so again, same thing. In order to calculate our cost, we're going to say 100 divided by 120. All right, because what we want is the cost, what we have is the selling price, times what is the amount? That 39,652.17. And there, what do we get? We get this 33,000. Okay, and that's going to then be our cost of sales. And this would be 48 rounded up to 2 decimal places. All right, so we've done that. We can then move on to the next transaction. And the next transaction happened on the 17th. Am I right? Or there's a second one on the 9th? Oh, yes, you're right. Okay, the second one on the 9th says sale of trading inventory, 14,250 less 4% paid discount. Okay. All right. Cool. So, remember what I said about a trade discount? It happens there and then, as soon as the transaction takes place. So here, what we would then need to do is what? What would we then need to do? Is this the price for which the goods went? This 14,250. Because it says 14,250 less 4%. It did say after the 4%, right? So what must happen? Can we use this amount? We can't, okay? We have to get the amount after the 4%, okay? So we say 14,250 and then times, right? You could say 4% of this amount, or you could simply say, if you want to do things faster, 0.96. In other words, 96%. All right? And then what do we get? We get 13,680. Okay, so this is how much was paid over to us. 13,680. Hey, did they say that amount was inclusive or exclusive? Okay, all right, they didn't say, so we can assume it's inclusive of that. 13,680. Okay, then the sales. We know that the sales has to be exclusive of that. So again, see, the good part about this is once you know what you're doing, it's all just repetition. Okay, so then we say 100 divided by 115. Okay, and there we get the amount that we need that is exclusive of that we can solve. Okay, then again, we now need the VAT amount. How do we get the VAT amount? Somebody give me the VAT amount and tell me how you calculated it. $1,000. Oh, just a second. 1,051. Yeah. 51. You rounded. Does everyone agree with that amount? Okay. Cool. So then this. Okay. Anyway. All right. I'm trusting you guys. Right. Then next thing that we need to do is obviously calculate the cost of sales. Okay. How do we do that? What did they tell us? The markup was 35%. And did they tell us whether it was on cost or selling price? On cost. Okay, so cost is then what? What amount of cost? If it's on cost, cost is 100, yes. Okay. You guys didn't get any of these type of questions in the test. Oh wait, there's a deep one. Yeah, okay. So you guys didn't have a test on Friday. Okay, well that's fine. Right. All right. So again, we want cost. Cost is 100 divided by 135, which is what we have, times the 11,895.6522 equals. So this was the cost of. This is how much we paid for this stock. Right, and there we go. Okay. Now we can go to sales. Is everybody good so far? We're together. Making sense. Okay. Then on the 17th, what happened? It says sale of trading inventory. The markup on this trading inventory was 30% on cost. Okay. The VAT exclusive total on the invoice was 20,100. So this time they've given us the VAT exclusive amount, right? Again, it is cash sales though. Okay, so there are the details. You can actually write the name of whoever we transacted with, or you can actually write cash sales. You still get the monthly rate. Okay, right. So what do we do? You guys tell me. What do we need to do? Yeah, but are we going to need the VAT exclusive amount somewhere? Are we using the VAT exclusive amount somewhere? That's all. Hmm? What have we been putting in the sales column? Exactly. So we can actually take this VAT exclusive amount and throw it in there right away, right? That was 20,100, right? Okay. Then, as you guys had said, we now need to calculate the VAT exclusive amount because we need to know how much is going into our bank account and how much we're going to be reporting in the analysis of receipt. What must happen over there? How do we get the VAT inclusive amount, guys? Somebody tell me. How do we get it? We have the VAT exclusive, we want the VAT inclusive. That amount. Okay, yes, you can do it that way, but can you see it the longer way? 150 over 100, right? Yes. Okay, excellent. Okay. But you can, like I said, you can do it that way. Just understand, in the test exam, obviously, this is going to take you an extra second or two. Okay. But that's perfectly fine. If that's the best way for you, then please do that. Teacher only wants to see the right answer. That's my only concern. Okay. Right. So now you calculated the VAT amount already. So what was that? That amount? 2,000. No cents, huh? Now we can calculate our cost of sales. So what was the profit or what was the markup? 30%. Okay. And then was it on selling price or on cost? On cost. Are you sure, guys? Oh yeah, it was on cost. So cost is what? 100. The selling price is? Okay. We're going to get our cost of sales again. We say 100 divided by 130 times 23,000, sorry, not 23,000, 20,100. Remember, we're using the VAT exclusive. Okay. If you use the VAT inclusive to get your cost of sale, what you're then going to need to do is once you now have that, remember that's your cost inclusive of that, you're going to need to calculate the VAT exclusive amount. Does that make sense? So it's more work. Okay? But you can do it that way as well. You still arrive at the same. Anyway, so let's copy this. I better get. Okay, so we have that. Then we can go to the 27th and see what's happening there. On the 27th, it says sale of trading inventory. The inventory was marked up by 30% on selling price. Okay. And there we've got the inventory was 2,405. Okay. So plug that in. Okay. Plug that in as well. But then we need that exclusive amount. So what we need to do is to say, okay, this 2,405 times 100 divided by 115. Okay. This amount right here. Okay. And that we know we plug into sales. For sales, we put the extra amount. Then we need to calculate the selling price. No. Sorry, the VAT. Okay. And what is the VAT? Somebody tell me very quickly. You can just subtract the two. That inclusive from the VAT exclusive. What do we get? 70 cents. Okay, we have that. And then finally, we can calculate for the last time the cost of sales. Cost of sales. Here they told us that it's 30% on selling price. So we know profit is definitely 30%. And then what else do we know, guys? Why? Why is 70 100? Hmm? 100%. Thank you very much, sir. Okay, so cost is then 70%. Alright, so what do we want? We want cost. We're calculating cost of sales. But what we have is sales, which is 100%. And we say times the rand amount, the VAT exclusive amount of 2,091. 30 gives us 1,091, 1,400. And that is our cost of sales amount right there. Okay. Then the last transaction that we need to record in the cash receipt journal happened on the 31st. And there it says, which one are we record? Okay, well, we wrote it down. Okay. I'm actually that's the question. All right. There it just says receipt interest from bank, 125. So we're not going to put that under analysis of receipt because that money never went into the till. Think about it. When you look on your bank statement and you have interest because you have positive bank balance, that money obviously never went into your till. It was sitting in your account. They just put it straight into your account. Does that make sense? So then there's no reason for us to put it in analysis of receipts. Okay, so here we just put 125. Okay. Then do we need to calculate that on this amount? Is that okay? Or you just, oh, okay. Do we need to calculate that? You don't, okay? There's no VAT on interest. Remember, interest is exempt. Okay? Then obviously you see, remember, there's always two accounts, at least two accounts that are affected by every transaction. All right, so here we know bank is obviously affected because it's increasing as a result of interest income. Are there any questions so far? It's still good? Okay, cool. I think that is the harder. There we are constantly calculating cost of sales. Whenever so it's like an extra calculation that you can typically have in the other journal. Okay. So now we can move on to the cash payment journal. I'll give you guys a break first. Let's just record maybe two transactions. So the first one, the first transaction in the cash payments journal happened on the 1st. Okay? And there what was happening, we were buying a delivery vehicle. Okay? So what we do, and remember they told us that it was inclusive of that. So there you can see under details we put M2 first. Okay, so we put 165,391 under the bank. And you see there's no analysis of receipts either. Okay. Then we know that this was a vehicle. There's no vehicle column, so you need to go to sundry. Okay. But something interesting that we read in the transaction as we're going through, they told us that all the paperwork or all the necessary documentation, right? What did they say exactly? All legislative requirements have been met for the full that amount to be claimed. So in other words, what they're trying to tell you there is we can claim input VAT on this. Okay? So then we say 165,9, is it 9391? Okay, we remove that all. Now we want to calculate the VAT, so 15 divided by 115. Okay, so that's, oh, goodness me. Okay, here we go. There we go. All right, copy that, and that is going to go into our input VAT column. Okay, that should be rounded off to 74. Right. Then under sundry, we're going to put the difference between the two, and what is that difference? Can somebody tell me? What is the amount there? 818 and 6 cents. Perfect. Awesome stuff. And we'll just do this last one and then I'll give you a break. The next transaction in the cash payments journal happened on the 12th. And there it says trading inventory purchase. All right. 57,229. Oh my goodness. Less a 10% trade discount. Okay. We're just recording now that we made a mistake with one of the transactions in the credit sheet. But we'll deal with that when we come back from the break. So, once again, they've given us a similar transaction to the other one. So it's less a 10% trade this time. So can we report it for the 57,000 there on the bank? You can't, right? All right, because it didn't say after a 10% trade this one. All right, so it's less. Okay, so we still need to deduct that 10%. Okay, so then we then are going to just say, what is the amount there? 57,000, how much? 228. Okay, then we say times, and just say 0.90. Okay, you get the amount after. In other words, saying 90%. And there we go. The amount right there. So this is how much we are paying. Right? And then all we need to do is calculate the amount exclusive of that. So 100 divided by 115. Okay, that's going to go under inventory, because that's what we're buying here, inventory. Then finally, we need to calculate the VAT amount. So again, we can just calculate the difference between the two, all right? Or we can actually literally do the calculation. What we want is 15. What we have is the VAT inclusive, all right, times the 57,000, okay? Or you can even use the VAT exclusive amount. You say 15 divided by 100 times the 51,000, okay? So what's important is that you obviously know what you're working with. So what I suggest to you is, as you guys do these exercises in your own time, pick up a rhythm or flow that works best for you, okay? And then just keep on doing that, and you'll always arrive at the right answer. So what am I putting under input vector? Mm-hmm. 7 cents, not 77. Okay. Is everybody happy so far? Okay. It's not rocket science, okay, but it definitely needs practice. Okay. All right, guys. So let's take our 10-minute break. If we can be back by 1/4 past, then we will proceed with this activity.